Everyone is racing to buy the next NVIDIA. Every investor, every hedge fund, every retail trader is piling into GPUs, AI software, and data center stocks. But they are completely ignoring the one bottleneck that could literally pull the plug on the entire AI revolution. It is not compute. It is not memory. It is not bandwidth. It is power. The next generation of AI data centers require as much electricity as a small city. And the traditional silicon chips managing all that power conversion are melting under the load. They waste enormous amounts of energy just trying to keep up. NVIDIA themselves co-developed a brand new 800-volt high-voltage DC architecture specifically because the old approach cannot handle the power density of next-generation AI data centers. And right at the heart of that new architecture is a small-cap company most retail investors have never heard of. Navitas Semiconductor. Ticker NVTS. On May 22, 2026 alone, NVTS surged nearly 20%, closing at $29.25. And that is on top of a year-to-date run that has taken this stock from under $9 all the way to where it sits today. We are talking about a 400% move in 2026. Is this the real deal, or is this hype that is about to blow up in your face? Today we are doing a complete no-fluff deep dive. The technology. The partnerships. The financials. The risks. And what a smart investor actually does from here. Let us get into it. And what they build. For decades, every power chip in every device ran on traditional silicon. Your phone charger. Your electric vehicle. Your data center power supply. It all ran on silicon. But we have officially hit the wall. Silicon simply cannot handle the power densities that AI infrastructure demands without producing massive heat, wasting energy, and taking up too much physical space. Navitas builds what are called wide bandgap semiconductors. Specifically GaN-SiC, which stands for gallium nitride, and GaN-SiC, which stands for silicon carbide. Here is the simplest way to think about these two technologies. GaN-SiC. Gallium nitride operates up to 20 times faster than traditional silicon and can cut energy loss by up to 50%. It is built for rapid high-frequency power switching inside AI servers and fast chargers. GaN-SiC. Silicon carbide is the heavy lifter. It handles extreme high voltages and punishing temperatures without flinching. Navitas just launched their 5th-generation GaN-SiC platform, specifically aimed at AI data centers and energy grid infrastructure. Now here is where it gets really interesting. Navitas collaborated with NVIDIA to co-develop an entirely new 800-volt high-voltage DC architecture for next-generation AI data centers, including systems built around NVIDIA's Rubin Ultra platform. Their flagship demonstration this year has been a 20 kilowatt 800-volt to 6-volt power delivery board, targeting 97.5% peak efficiency. Read that again. 97.5% efficiency. In an industry where data center cooling already costs billions of dollars a year, that number is not just impressive. It is a competitive weapon. And together with EPFL, one of Europe's top technical universities, Navitas demonstrated a 250 kilowatt solid-state transformer solution that converts power from the grid directly to 800-volt DC in a single stage. That eliminates the massive heavy transformers that traditional data centers depend on, making the entire power chain smaller, faster, and dramatically more efficient. This is not incremental improvement. This is a fundamental redesign of how AI data centers consume power. So why is this stock exploding right now in 2026? It is not one catalyst. It is 5 separate catalysts all hitting at the same time. Catalyst number 1. The GlobalFoundries deal. Navitas signed a long-term strategic partnership with GlobalFoundries to manufacture next-generation GaN technology at their Burlington, Vermont facility. Production is expected to begin later this year. At a time when the U.S. government is pouring money into domestic semiconductor manufacturing. Navitas just locked in an American supply chain for their most critical product line. That is a geopolitical shield and a sales pitch to every US hyperscaler that wants to buy American. Catalyst number 2. The NVIDIA relationship. Navitas serves as a power semiconductor partner for next-generation 800-volt DC AI factory architectures, with engagements involving multiple hyperscalers. Being embedded inside NVIDIA's reference architecture means every system builder designing around NVIDIA's roadmap is being pointed directly at Navitas technology. That is the kind of design win that turns into a long-term revenue stream. Catalyst number 3. The EPFL solid-state transformer. The platform they built with EPFL eliminates bulky low-frequency transformers while improving end-to-end efficiency. For data center operators trying to reduce energy costs, this technology is a direct cost reduction solution. Catalyst number 4. India expansion. Navitas licensed its GaN technology to Cyient Semiconductors to power India's first locally branded GaN IC family, for AI data centers, telecom, fast charging, and industrial power. India is one of the fastest growing technology markets on the planet. Navitas just secured a foothold there through a licensing deal. Catalyst number 5. The earnings beat. For Q1 2026. Navitas reported total revenue of $8.6 million, up 18% sequentially. High-power markets grew 35% year-over-year and now account for the majority of total revenue. Their non-GAAP loss per share came in at -4 cents, beating the street consensus of -5 cents. And for Q2 2026, management guided revenue to approximately $10 million, above analyst expectations, implying more than 16% sequential growth. The analyst community responded immediately. Baird raised their price target from $9 to $20. Needham lifted theirs from $13 to $21. Morgan Stanley moved from $4.20 to $12.50. And Rosenblatt went from $7 to $13. Now, regular viewers of this channel know we do not just come here to hype stocks. We tell you the full picture. And right now the full picture on Navitas has some serious yellow flags you need to understand before you put a single dollar to work. Risk number 1. They are still losing money. Navitas posted a GAAP net loss of $33.8 million in Q1 2026. Why? Because pivoting a business is expensive. They are cutting low-margin mobile charger revenue on purpose while simultaneously funding research and development for AI, silicon carbide, and grid infrastructure. That is the right long-term move, but it burns cash in the short term. Risk number 2. Dilution is real. Navitas has been selling new shares through an equity program, raising approximately $122 million. When a company sells that many new shares, existing shareholders get diluted. The stock dropped over 10% on the day that dilution news hit. That is real money for real investors. Risk number 3. The stock has outrun every analyst target. The most bullish Wall Street analyst currently has a $21 target. The stock is at $29. That gap matters. It means the market is pricing in a growth story that has not yet shown up in the income statement. You are paying for the future, not the present. Risk number 4. Revenue inflection is not expected until 2027. Design qualification cycles in AI data centers are long, meaning even a win today does not translate to meaningful revenue for 12 to 18 months. And in the global power semiconductor arena, Navitas is a David fighting multiple Goliaths. Infineon has deeper pockets. Wolfspeed leads in raw silicon carbide production. Staying ahead of better-funded competitors requires flawless execution. Alright, let us bring it all together. Here is the flow money investor framework for NVTS. Short term, this is high risk. The stock is technically extended, trading above every analyst target. Due for a consolidation or a healthy pullback? If you are a short-term trader trying to chase this stock at an all-time high after a 400% move, you are late to that trade. Medium term, watch for confirmation. Management guided Q2 2026 revenue to approximately $10 million with improving gross margins. If they hit that, and if Q3 shows the first signs of GAAP gross margin turning positive, that is when the story transitions from speculative AI bet to real revenue business. That is the confirmation signal a disciplined investor waits for. Long term, 3 to 5 years, this is a high-conviction thesis. The global AI data center market is projected to grow from $236 billion in 2025 to nearly $934 billion by 2030. Inside that massive growth wave, every single rack needs power conversion. Navitas estimates its total addressable opportunity in high-power GaN and SiC markets at $3.5 billion. With over 300 patents, a foundry deal with GlobalFoundries, and an embedded relationship with NVIDIA, the long-term bull case is genuinely compelling. My personal strategy here is not to chase this at $29. I am watching for a pullback into the $18 to $22 range. If I am building a position, I am doing it in small tranches on red days. Not one big lump sum at the peak. The most important upcoming catalyst to watch is PCIM Europe 2026 in Nuremberg, Germany, running June 9 through 11th. Navitas is set to showcase their 20 kilowatt power delivery board, their solid-state transformer solutions, and their full GaN and SiC product families. Any meaningful design win announcements coming out of that event could be the next leg higher. Here is the bottom line on Navitas Semiconductor. The technology is real. The NVIDIA partnership is real. The GlobalFoundries deal is real. The India expansion is real. And the $934 billion AI data center market they are targeting is absolutely real. But this stock has moved fast. Very fast. And at $29, with every analyst still below that price, you are not buying a secret. You are buying a story that Wall Street already knows. The question is whether the execution over the next 4 to 6 quarters actually justifies what you are paying today. NVTS is firmly on the Flow Money watch list. Now I want to hear from you. Are you already in NVTS? Are you waiting for a pullback? Drop your thoughts in the comments below. Give this video a like if it helped you see something other channels are missing. Hit that subscribe button so you never miss our next deep dive. It is never too early and never too late to start building wealth. I will see you in the next video.